The way I see it, you've got four main ways of picking stocks. First one, you've got the standard, boring, fundamental analysis. Two, you've got the theoretical nerd who loves looking at the economy, economic analysis. Third, you've got the chart maniacs, praising and worshipping the charts, technical analysis. And the absolute wild west of the stock picking world, speculative analysis. And together, they are the Brady Bunch. But you didn't come here just for their names. And you should be asking,
what do they mean? And how do I use them?
Well, today I'm going to tell you. Not only will you learn about what they are, but I'm also going to give you my opinion on what the risk factor is for each one, so you can make smart investment decisions. What's that? My viewers deserve more? I think so too. That's why I'm also going to tell you the best free tools and paid tools, so you can get started straight away. I'm even going to be throwing in a few stock picks or stocks that I've made money on throughout the video. But of course, the best free tool is this channel. So please hit that like and subscribe button so you get more educational videos like this so you can be a great stock picker and make heaps of money. While I will be giving away some tips and some educational information in this video, make sure you always do your own research before making any investment decisions. Time is money and I don't plan on wasting yours, so let's get into it. So the first is my favorite, fundamental analysis. I believe this is the least risky option and when used correctly can maximize your profit. Fundamental analysis is looking at a company's individual financial performance and comparing and assessing that with other companies and the market. The key things to look at here are profit margins, debt to equity ratio, return on assets and equity, the 3 P's, P ratio, PEB ratio, and PEG ratio, and last but not least, liabilities. So you're probably wondering,
what do all these mean?
Well, let's get into that. Profit margins. Profit margins are essentially how much a business or a company is earning. This is calculated by dividing revenues with income. In a company, you want to look for increasing profit margins. Debt to equity ratio. You're probably asking, what is equity? Equity represents what the company has if it sold all of its assets and paid off all of its debts. That amount left over is the equity. This is probably one of my favorite metrics and you want a low debt to equity ratio. I've actually left a link down below in the description to give you some examples of Australian companies with a low debt to equity ratio. Return on equity and return on assets. Return on equity is generally the net income divided by the equity, while return on assets is the net income divided by the assets. When you're picking a stock, you need to know exactly how well the company's management is doing. Return on equity and return on assets are two of the most important metrics for assessing this. As a personal tip, call it Jordan's hot tips, for technology companies, you want to focus more on the return on equity rather than the return on assets. PE, PB, and PEG ratios. Price earnings, price book, and price earnings to growth ratios. If you want a real quick and dirty way of comparing your company with another company without really having to do a lot of research, then these ratios are your best friend. Sorry, dogs. Liabilities. Liabilities are how much your company owes. Generally, you want short-term assets, often cash or cash equivalents, to be as high as possible in comparison to short and long-term liabilities, which usually means loans with interest. Fundamental analysis is boring but reliable. It's what Warren Buffett actually uses, so you can definitely trust this method. But the next analysis I find a little bit more exciting, and it's also my brother's favorite, economic analysis. If you like general economic principles like supply driving demand in the economy, then this one is probably for you. Economic analysis is looking at different industries and understanding which ones are likely to benefit from the current economic situation. Then you pick a company in that industry based on the fundamentals. This is why it's really good to complement the fundamental analysis. It's generally not that good for picking individual companies, unless it's the only company in that industry that is likely to benefit. A few examples of economic analysis are lithium miners that are profiting off the increased demand in lithium. I actually made money through a stock with the ASX code GLN, Gallon, and I plan on doing a video on this soon. Another example is Kogan, KGN is the ASX code, who benefited from a huge increase in online shopping. Afterpay is another example, and they benefited from the COVID situation and people wanting to buy things but not having the money for it. So they turned to Afterpay and they could pay later. Economic analysis, I'd probably say is just a little bit, more risky than fundamental analysis. But if you're really good at understanding the economy If you're really good at understanding the economy with the macro and micro analysis, this could be really good for you. It's definitely much less riskier than technical analysis and speculative analysis. Okay, so those two are a little bit more serious, and the next two are really fun, so get ready for it. Technical analysis. Technical analysis is bowing down to the chart gods, drawing shapes and triangles on charts, trying to figure out whether the price of a stock, ETF, or even a cryptocurrency is likely to go. People who use technical analysis evaluate investments and trading opportunities through price trends and volumes based on charts. In my opinion, this is not a really strong way to pick individual stocks. And it's really just kind of using confirmation bias and schedules of reinforcement. This is a fancy psychological way of saying that a chart is doing something because it did that same thing before, which isn't necessarily true. I think technical analysis can definitely complement economic analysis and fundamental analysis, but a strong word of caution if you're using this just to pick stocks. I think this is most risky so far out of the options, but not the most risky overall. So does reading charts, looking at the economy, or looking at the company's financial statements sound kind of boring to you? Well, don't worry. There's one more that's super duper fun and the most risky for sure. Speculative analysis is going on websites like Google Trends or Reddit or ListCorp and trying to find a new trending stock or cryptocurrency, buying in early when the price is low and selling out when the price is high, and trying to avoid the inevitable drop. Yeah, Lorraine, how much money do I have? Put it all on GameStop. I don't really get into this type of trading, and that's because you're trying to time the market, which is impossible and borderline insane. But if you can do this kind of thing, don't be sleeping on me, man. Give me a call. Let's make some money. So those are the 4 ways to pick stocks: fundamental analysis, economic analysis, technical analysis, and speculative analysis. But now you're probably wondering,
How do I start?
and as I promised, I'm going to show you some free and paid tools so you can start picking winners today. But if you want to be a little bit less involved in stock picking, I'd suggest looking into passive investment apps. Link up top. So I'll start with the free tools, because I know not everyone has the money to get started. So the best free tool is this YouTube channel. So please hit that like and subscribe button. It would mean the world to me and really helps this video get out into the YouTube algorithm and into the YouTube world so other people can benefit from these educational videos. Now for some other ones. So Google Finance. Google Finance is really useful for making watch lists and getting daily updates. For example, you can have an update that tells you what the price of a particular stock has done for the day at 4:30 p.m. Reddit. I find that Reddit has really good options and information on stock picks, and I really like the discussion sections so you can get more of an idea of what people are saying. So those are 3 free tools. And so what are some paid tools? ComSec is definitely top of my list. I use this for analyzing stocks and analyzing the market. And I just think overall it's a really good value for money, especially if you have a CDIA with ComSec, you get all these tools for free. The second I would say is Australian Financial Review. If you can pay for a subscription, this is really good for getting ideas and understanding the market fluctuations and what's going on in the broader economy. Obviously very important if you want to do economic analysis. The different ways of picking stocks and bringing them all together will help you become a winner. So let me know down in the comments about which one you decide to pick. Are you going to be the next ASX Bets hero or a chart god using technical analysis? Maybe you're a fundamental picker. Or maybe you're a combination of all of them like me. But of course, maybe stock picking isn't for you, and that's okay as well. If not, I've actually made a really good video on figuring out the benefits and the cons of ETFs and property. Link up top. So let me know in the comments of any stocks that you're looking into or what you think is good value right now. As always, next step, invest. And make sure you like and subscribe to this channel. Feel free to watch another video here or here or here, and I'll see you again soon. Often cash or quash. Warren Buffett